All right. Good evening, everybody. Sound check. How's the sound? I tested it a couple minutes ago. All sounded good. Can you hear me okay? Hi, everybody. I got a sense there's a few people in here that I haven't seen for a while. This is Paul Lang. I am finally up with my own company after quite a long time. A lot of you have known me for quite a few years. And the company is Disciplined Trading Strategies, and I'm just doing some good old-fashioned stuff, just having fun, and looking to help whatever group of traders wants to do it with me here. We have a trading room and a market letter, and I'll be doing only three seminars that combine everything that I know about trading into 3 single days. So how you doing, guys? Hey, Sean, glad you could make it. I think I just emailed you a couple hours ago. So tonight we are here. I'm going to get right to business. I want to try and keep this to about an hour so that those of you who planned on an hour can get what you want and get out of here if you want to. I'm not on a schedule though, so I will hang around after that a little bit if you have some what about my stock type of questions. Okay. So I'm going to run through. We have kind of two topics tonight that I combined. One is scanning and preparing for swing core positions, and the other one's going to be talking about how to interpret the market analysis in general, but specifically the analysis that goes into the DTS market letter that I put out every day. So I want to start you off. For those of you here on time, I want to start you off with one of the most important things that I can tell you about what we're going to talk about tonight for the first topic about scanning and looking at stock patterns in general. Now tonight I'm going to be focused on the longer term patterns, swing, which we typically refer to as being like from 2 to whatever number of days you can hold it, or core, meaning those long term positions, that you could theoretically hold forever. I use the word trading for everything. Long-term trading, you may have a trade the last 5 years is still a trade to me because the term investing I still use. There's nothing wrong with that as long as we understand that investing is the same term as trading. It does not have anything to do with buying and holding, hoping and praying based on fundamentals, because that is something that ended a long, long time ago. So we're going to take a look at some charts and go through some swing and core things. And I want to go through the procedure that I use. But let me tell you what to me is one of the most important things that I learned a long, long time ago, actually at the end of my first year of trading. And for those of you who are with me in the room, forgive me because I told this story a week or two ago, and I've told in the past, but to me it's a real important one. If there were like 5 or 6 stories that I could tell everybody I was teaching, this would probably be one of them. It's a very simple one. Going back a number of years, like my end of my first year of trading, I lived somewhere else, and I had a neighbor, and we used to run together every morning. So he'd come over and knock on my door about 6:15 in the morning, and we'd run. He kind of knew what I did for a living, but he wasn't really into the market at all. Didn't understand, didn't get it. Totally, didn't know what was going on with it. And after I don't know, we'd been running a couple months together. He stops me one day when we're leaving and says, "Hey, would you do me a favor? I know you do this all day for a living, and I wanted you to let me know what you think of the stock Allstate." He had worked for Allstate for a decade, and his entire portfolio, his entire IRA, everything he had was all Allstate stock. I said, "I just want to know, should I, be hanging on to it, selling it? What should I be doing with this?" So I said, "Sure, I'll take a look at it that night." I'll get back to him the next morning. So I pull up the charts of Allstate that night, and I look at, he's looking long term. So I look at the daily chart, look at the weekly chart, look at the monthly chart. And, I had been doing really well trading, and it was about the end of my first year. I was kind of weird. I actually did well out of the gates, but I looked at these charts and I looked at them and went back to the daily, went back to the monthly, went to the weekly, looked at them again. I turned the charts upside down. I turned the monitor upside down. I stood on my head. I looked at them some more, and I started to get this real sinking feeling. Anybody know what my problem was? Why I was getting such an uneasy feeling? As I was looking at this one single symbol called Allstate and trying to look at it for my neighbor. Anybody know why? Go on, give it a shot. I won't yell at you. Why was I getting so uneasy? No, it's not that it looked hopeless, because I would have told them, "Hey, it's a piece of garbage, get rid of it." That would have been easy for me. Didn't have a personal interest in Allstate, could care less, didn't know it. I was in bad hands. uh, like a sense of humor. Just don't try to challenge my sense of humor. No, 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 no. None even have it. None of you even have it. My problem was I looked at this stock and I didn't have a clue what to tell them. I didn't have a clue what to tell them. And I'm thinking to myself, holy cow, I've been like trading for a year and I feel pretty good about it. I feel like, hey, I could teach charts to anybody even after my first year. And I felt really good. And I looked at this stock and I couldn't tell them what I thought of it. And it hit me over the next 2-3 months exactly what that was. And it turns out to be, to me, one of the most important things that you can understand as a technical trader. And again, trader meaning you hold for 5 seconds, you hold for 5 years, I don't care, you're looking at charts. And that was this very simple fact, that when we go looking at charts, our job is not to take any chart out there and make a determination on it. That's not what we do. That's way too hard. I can certainly look at any chart, and I'll put myself up against anybody. I could look at a chart and make comments about it and say, well, if this, then that. But to actually say, look at this chart, would you buy it or sell it? Tell me what you're going to do right now. You know what? 95% of the charts you look at, you shouldn't be able to say. You should just be, geez, I don't know. I don't have a clue. I don't know what it's doing. See, our job as a trader is not to try and make something out of everything you look at. That's what people do wrong. Our job is to look at everything and say, that is, I'm going to type it on the screen for you. Somebody already did, Mr. Vandelay. That is crap. Not meaning like it's caca, but it means it's can't recognize a pattern. See, we're not trying to make something out of nothing. We're looking for specific patterns that we know and we love and we recognize. And when we find those, that's where we get odds. That's where we get odds in our favor, by finding those patterns that we know and that we love. Now, one of the things I have to break to you tonight, I hope most of you understand this, is that as I go through tonight, I'm going to go through a procedure of what I do to look for these things. At some point, I'm going to say, and here, folks, is where you, find those patterns that you love. My job here tonight, I hope you understand, is not to teach you the patterns. That's takes 3 full days. You know, it's not something, even if I wanted to, that I could convey in an hour. I couldn't even scratch on it. But whatever it is you look at, I mean, whatever it is that you love, I mean, that's what you go in the patterns you find. So when I get to that spot, I kind of glaze over it as if it was a simple thing, but that really is the 99% of what you do as a technical trader, is what is it that you look for? What is it that you know and love? What gives you the odds? I can tell you exactly what I do. I can teach you what I do, but everybody's different. There are things that work out there, and I'm not at all one of those people that says, here's the only thing you can do in the market. There's a lot of ways to make money in the market. The question is, do you have one? That's the question a lot of people can't answer. So let's begin and take a look here what we're going to go through today. I hope that was a good introduction. I hope some of you may not appreciate how important what I just said was, because it took me a long time to really fully understand that. And when you do, you'll be a much better trader for it. All right, so the first part here about scanning, we're going to go over a couple of things we need to look at before you even start talking about looking at charts: market timing and your personal portfolio requirements. And then we're going to talk about 2 different ways that you really can go about being a long-term trader, and that's the typical top-down technical approach, or using gap analysis. And the reason I have elevated using gap analysis as one of the 2 ways is because it is hard to beat a portfolio if you do it properly based on gapping stocks on the daily chart. If you don't have a clue what I'm talking about, hang in there. I'll get to it in just a minute. All right, first thing I want to bring up to you before you even go looking at charts and before you start saying, there's 2 things we have to be very careful about. And that is, I think for the most part, it is very difficult to try to run any kind of longer term portfolio and not take the market into consideration. In other words, you are not going to have a good time making money going long stocks, no matter how hard you research them, if the market's falling. Do most of you agree with that? That little picture there is a boat. That's, you know, the boat that raises all. The boat that raises all. What's that? No, the tide that lifts all boats. Right? You guys agree with that? I'm not saying you can't find a stock here or there. Right? Absolutely, you can. But I'm just saying, in general, when you're fighting the market, you're trying to shoot at that little wave against a tidal wave coming at you. So you can't ignore this. And your analysis before you even start looking at individual stocks is to say, all right, where are we in the market right now? What is the trend on the time frames that I care about? Where are we in that trend? Are we in the sweet spot? Are we a little extended? Should I be waiting? Should I look for a better opportunity later? Where should we be in terms of the time frame I'm looking at? And for you, that might be monthly charts, maybe weekly charts, maybe daily charts. You may be looking to build portfolios that you're going to hold for 30 years. If you're young, you may be building a portfolio that you're looking to hold until the end of the year, right? So that's the first question, is don't ever forget that you have to coordinate in time what you're doing with the market. And how do you analyze the market? Well, you analyze it the same way you analyze a stock. Now, here's a case where you don't have a choice of saying, oh, let's pass that and go to the next chart. The market you have to analyze. You have to do your best at it, and that's why you don't always get it right. But there are a couple of things that you always have in your advantage, and that is that there are really two and only two times that you have odds in your favor when you're looking at charts. And I'll mention those a little bit later, but I want to continue on for right now. He will not do well at fighting the market. Okay, number two, the other thing is, despite what the market's doing and despite what stocks you're going to look for, is you have to make a decision ahead of time, is just in terms of your personal finances, what should you be buying, what should you be owning? In other words, for everybody at every different age, I think it's a good thing to plan out your finances and use a financial planner. Don't use one, whatever, that's fine. But you should be saying, okay, look, some of my money's going here, some's going here. I use some to day trade with, and here I'm going to use this. I'm fairly young. I'm going to keep 70% of my money investing in stocks, trading, long-term trading of stocks. Fine. So you've decided how much money that comes out to, but then there's a second figure you have to do also. If you've decided you're going to have X amount of money in the market, what's the other thing you really need to look into in terms of percentage of that money? I'm going to kind of give you the answer because I don't think anybody's going to get this one. But that is, what percentage invested should you be at all times? In other words, somebody who is just starting to put money into the market long term right now is probably making a big mistake. Now, I think the market's continuing higher. There's no reason to say we're at a top right now. 10 years ago, almost to the day, one day later, I called the low in this market, and I said it's going to be a decade-long rally. I'm not here to brag about it. I'm just here to say it's not hard to figure this stuff out. And we are not at a top. And I'm going to talk about this a little bit more in the letter real quick. When I say not at a top, I'm talking big picture. I'm talking 2000 crash, 2008 crash. We're not there. We will be someday, of course, but we're not there right now. There's nothing to stop the market from continuing higher. Markets don't always put those kind of tops, and sometimes they kind of roll over, but right now there's no reason to think big picture things are not higher. Most people who step out and call the market are usually about 2 years early in predicting the top, just FYI, and you're just starting to hear those now. But where you want to be in your portfolio is also saying, what percentage should I be invested? In other words, there could have been a point in time, if you were young, that back many years ago, you were 100% invested in the market. 100% of the money, you understand what I'm saying? 100% of the money you should have allocated to the market, you had invested in the market. Great. But at some point in time, you have to have guidelines set up for yourself to say, when you reach this percentage return, when the stock market becomes X percentage above the moving average, with some guideline for you to say, hey, you know what, I need to sell some of this. I need to sell some of this, because you want to sell long-term positions on rallies. For those of you who've done this before and you get frustrated by this, true or false, and if you put true, put a scale of 1 to 10, like 10 being wow, you're really right. If you try and long-term invest and you use like trail stop mentalities, you get back huge chunks of your profit. Is that true or false? Trail stopping is always nice, but I mean, if you're the way most people do it, you're going to end up giving back huge chunks. True or false? Right? True. Right. Somewhat true. Naturally, there's different ways to do it. And I was saying everybody does, and a lot of people naturally take profits way too soon. But if you're following a procedure, there are times, and that's why there has to be different ways to manage at certain different spots on the chart. I talk about that in classes and stuff. But what's important is that you understand that it's important to have a policy set up of selling some into big, really strong rallies. In other words, you decide ahead of time, what is my goal? What am I trying to do here? And you get like that huge move up we had, and I'll show you some charts in a minute, but you get that huge move up we had before this little consolidation period. Maybe you're selling a fourth of your portfolio, a third of it. And this is what you have to have determined, is to say, okay, at certain points in time, I need to get down to 50% invested and be 50% cash. Because I don't want to, what if the mushroom cloud comes up over Washington, D.C. tomorrow? You know, whatever. I'm at the point that I have so much profit, I don't want that all on the table anymore. So it's just a smart, prudent thing to do. And then at some point in time, maybe you can say, you know what, I'm down to 33% in the market only, and according to my analysis, the market's not done going higher. So when we get to this area in the market, you pull out a chart, you find the area, you say, we get to this area in the market, I'll reinvest 33% of my portfolio. Okay, so that's the second thing I'm getting at, is number one, don't ignore the market, and number two, you have to have guidelines set up of what you're allowed to do. In other words, you don't just randomly start saying, oh, the market's taken off, let me buy my whole portfolio, boom, today. And then the market has a setback and you're sitting there negative the entire time. So that's good portfolio management. All right. So that is the first two steps before we can start looking at it. All right. So now we get into, fine, I'm ready to buy some stocks. My portfolio says I can buy stocks. The market says I can buy stocks. What do I buy? Well, there's two ways to do it. The first one I'm going to talk about is the typical top-down technical analysis approach. Step number one is to create a universe of stocks that you want to monitor, a big universe. I'm talking about just eliminating things that you'd never want to own. Let's say you can't afford Netflix or whatever the $600 stocks are. So maybe you just want to look at stocks that are between $5 and $50 or whatever it is. And there's certain volume requirements you may have, because you can't buying stocks that trade 25,000 shares a day, because they may stop trading, they make it too hard to get out of. So you set up a volume requirement for yourself. You can create a universe by doing that. You can set up these price and volume requirements. Wait, where's my Can you see? No, you can't see that. I was wondering. I don't have. There it is. There's the red dot. There, you got the red dot. There we go. Okay, you can see the red dot. And also, you can create a universe, if you will, simply by combining lists of stocks. I mean, maybe you just take the S&P and some other indices, throw them together, and say, "There's my universe of stocks." So. And by the way, if you, I have a universe posted, and basically I just use stocks over about $2.50, somewhere between 2 and 3, and stocks that are trading at least 700,000 or 800,000 for like swing trading. You have to go higher than that for day trading usually, but for swing trading. And that produces a list, and I throw out all the ETFs. I don't like them in there because they're kind of just duplicating the market. And that produces a list of about 900, 1,000 stocks right now. That list is posted in the trading room for those of you in there. If you want to just email me, I can send it to you. Or I have a scanner where if you want me to, just send me the requirements. I'll send you back your list. In other words, Paul, I want all stocks between $5 and $50 to trade at least 2 million shares a day. I can just send it back to you, a piece of cake. So let me know if you want to do that. Okay, so then you take this list, whatever it is, 500, 1,000 stocks, whatever you're looking at, and you scan it. Now, if you're going to be swing trading, you perhaps scan it every day. If you're very active or with the market every day, perhaps you scan just on the weekends for either swing ideas or core ideas. And here's where you scan your universe for PYR. Patterns. What is PYR? I threw that out there. I just kind of made it up at the moment. Patterns you love. It's supposed to be PYL, I guess. Patterns you recognize. Thank you. Patterns you recognize. I forgot what I put down there. Yeah, I've never used that before. But you scan for patterns that you recognize, whatever those are. And again, here I could sit here for the next 27 hours and tell you what I love to recognize as a pattern. And I'm going to go over some of those. I mean, I don't hold back when I talk to you and I'm looking at charts. I'll give you whatever I know. But, here's where you have to decide what it is that you want to do in the market, what you know, what you love to look at from a technical point of view. Quick little note here, difference between your platform, internet site, and a service. When you do this scanning, when I go through, I'm looking at about 1,000 stocks. And it does not take me long to go through this. It takes me about 15 minutes to go through 1,000 stocks because I'm going very quickly. But your typical charting platforms, whatever you use, even though they're great charting platforms, the best of the best charting platforms, they're not very fast going from symbol to symbol. You may think they're fast during the day when you switch a symbol. That's great. But when I want to go through, I really want to go through fairly quickly. So let me show you something that I use. And again, I don't care if you use it. I have no interest in it, but I've used this literally for 18 years because it is fast. Because it downloads the symbols to your computer in about a half a minute. And then it allows you to fly through them really quickly. Let me see if we can get this here. Got that okay? All right. So this is called Telechart 2000. It's 29 bucks a month, and it just lets you download. And this is what I want to show you is that you can fly through here, this quickly. See how quickly I'm going? Can you see? I don't know if yeah, I can see on my other screen. No, you're not getting it. The camera doesn't keep up with me. Yeah, you can't really see how fast I'm going. The camera doesn't keep up with me. But I'm going here. Listen to the mouse. It's keeping up 100% with me on my screen. You are not because of the camera delay, but so I can go through that quickly and look at stocks. And right, you hit the space bar exactly, use it and zip right through. Did T-Pro 100? What? I don't know what that means, Sean. And if you're wondering, well, how can you possibly go through them that quick? Well, it's real simple. If you went to a 12-year-old and said, hey, I'm going to show you these series of squares, stop when you see the circle. That's what it's like to me. And that's what it's like for a lot of you. You're looking for a particular pattern, and it really jumps out at you. What am I looking for? I'm looking for clean trends up, clean trends down. I'm looking for pullback inside of clean trends. I'm looking for support areas. I'm looking at fail patterns. I'm looking at the failure of the failure of wide bars, one direction or the other, wide bars that are igniting bars. I'm looking for about a dozen things that I know and I recognize and I love. And when I go through and I scan, you just go through, and this program lets you just hit F to flag something. See, like whatever I'm on here, if I hit F, see, it flagged it over here, MDLZ, it flagged it. And then when I'm all done going through these, you just hit a little key combination. It pulls up all of the flagged items, and I usually have about 12. I go through 1,000 stocks, and I come up with 12 on average. Okay? What does that tell you about what I said? Remember I said 95% of what you look at should be crap, right? So that's 5. So that would mean that there should be no more than 50 patterns out of 1,000. So actually I was wrong. So really 98% of what you look at is crap, and 2% is worth looking at, right? I take those dozen or so names, and I can export them to a little text file because I work back and forth between two computers, and then I'll have that text file for either computer. And then what I do is I take that. Where am I here? So right now you got the camera up. You're looking at Telechart 2000. I just want to show you that real quick to show you. Again, to show you what I do, not what you have to do, but I'm just doing a procedure I do. And then I go and I throw them onto my trading platform. Now on my trading platform, I have a page. I have several pages. You all should do that. I have a page set up that I call research. And on that page is nothing but big charts. A couple watch lists and just big charts. That's all there is, because I only use it to go through and look. And actually, I put up 6 charts here, but typically I have 4 charts on the screen. And if I'm looking for swing, I'll typically have up a 15-minute, a 60, a daily, and a weekly. If I'm looking at core, I typically have up a monthly, weekly, daily, and the 60 is there, but it's really not all that relevant. It's just the 4th chart to fill in. Okay. And I find that when I take those 12 charts and then I go through and look at them a second time, I'll probably cut out about 1/3 of them just to say, okay, they weren't that great. But when I'm going through the 1,000, I don't want to sit and stop and stare at symbols, because then it takes you an hour to go through them. So I'm just flying through and saying, hey, if it's something worth looking at, I flag it. And then I look at it, and now I'm looking at 12 symbols. And I'll take, 10 seconds to look at each symbol maybe and decide what I want to keep and not keep. And this is the procedure I go through on the weekends for core type finds, looking at weekly charts. It's what I go through every day for two things. The daily charts I look at could be swing type things, or my favorite play on an intraday basis is to find great intraday entries to strong daily charts. So that's the second thing I'm looking for when I'm scanning every single day. It actually is the number one thing I like doing intraday. I do that more than I do gaps, actually, and it is my favorite pattern overall, to find great intraday entries on really strong daily charts. Okay? And there's one other thing you need to look for. I'm going to go back a slide when you're doing this, and that's it. That's this. If you're really going to enter something and hold it overnight, check for earnings. Okay, check for earnings. Now, there's nothing wrong with holding a stock through earnings. I mean, you go back years ago, I got people never even knew what earnings were. They just bought them and held them and didn't care what was going on. But you don't want to buy something right into earnings. You don't want to buy it ever because of earnings. We never buy something ahead of earnings, praying and hoping that it goes the direction that we play. It's not what we do. So you don't want to get something right before earnings. Now, if you're holding a swing or a core position and you have it and it's seasoned and you're up some money and you come into earnings, there's nothing wrong with holding it if that's what you want to do. Sometimes you get a big boost, sometimes you won't, but don't buy something in order to get into earnings, okay? All right, let me just take a second here before I continue on. How we doing? Understanding what I'm saying? Any questions so far before I go any further? Good stuff. Understand my speak. Understand what I'm saying. All good? All good? All right. Okay. And the next thing that you want to do is right here. And to me, this is one of the most important things that there is to trading. And that is right down here. Something that nobody does. Most people get this watch list out. Right? Boom. See that highlighted thing? And then all of a sudden during the day or whenever they're just like, yeah, okay, I'll get in it. Just really no clue, right? Or it starts to take off. You ever done that, everybody? Like you have something on your watch list and it starts to take off, and then you just get in it because you don't want to miss it, and then you really come to regret it, and you go, why did I do that? Right? Does that sound familiar, anyone? See, what you want to do is, I always call this make the stock come to you. In other words, you decide what the stock has to do for you to buy it. Right? You're in control. You have the power. You don't have to buy anything. You can pass anything you want to pass. And you say, Mr. Stock, you come down here and do this, and I'll buy you. If it doesn't do that, you ignore it. That's why you have a watch list, because you have other options. And you have another option, too, and that is not to do anything. Okay? Yeah, Sean, if you come up with too many on your watch list, which is a problem I used to have, don't change what you do on the first cut. And let's say you come up with 35 symbols instead of 12 like I do, right? Then what you do is you go through and you say to yourself, you take two passes through the 30, and you say, you know what? You have to cut out the worst 10. Just like you're an employee of somebody, got to cut out 10. And you cut out the worst 10. You go through it again and say, I got to cut out another 5 or 10. And you just cut them out. You may be throwing away a good symbol, but you know what? It's not the top 10 or 15 or whatever you want, so you throw them out. That's how you get past that, all right? Johnny Lee, you only check for earnings if you're down to being one of your final symbols that you may actually purchase. And what I'm saying is you don't want to buy a stock right before it does earnings, because they can have huge moves, and it could move against you. So I'm going to say I'm going to speak for everybody. We never want to buy a stock just guessing what the earnings are. Trading, investing is not about guessing or about luck. It's about a quasi-scientific approach where we get odds in our favor and let the odds play out. And you don't have odds just taking a guess what earnings are. Now, we're in a huge bullish market. I'm sure you could easily prove to me that on average stocks go up at earnings time. That's great. But that doesn't really help you if you're the guy who just bought a stock that went down 50% overnight. You know what I mean? It's kind of like the statistic, that only 1 in 70 million people get bitten by a shark. Well, it's not the same odds if you're swimming in 50 feet deep water ocean and you're bleeding. Then the odds change a little bit, right? You don't care about the odds of being bitten by a shark when you're out in the ocean and you're bleeding. So it's just a good precaution. And again, there's nothing wrong with holding through earnings. If that's your intent and you've been holding for a while and you're seasoned in the stock, you have some equity in it, that's fine. But don't buy it just to try and catch earnings, okay? Well, there's some guy here in Florida that got bit twice. He got bit, he went out again, and he got bit again. Guess he didn't care. All right. So moving on. He must have been. Um, so that is. I showed you a picture of my platform that I do research on. I think is no point in pulling up live because you're just going to see the same thing as the picture, and naturally the charts move when you put symbols in them, but that's no big deal. Um, and what I do when I put on my platform is I look at all the time frames. In other words, if I'm looking for swing trades, I'm on the daily chart. But very often, you may see something you like on the daily, and then you see the weekly chart, and you say, "Oh, wait a minute, there's a problem." And going the other way too, I may see something on the daily chart and say, "Wow, look at that hourly chart! What a great entry!" As a matter of fact, let me. I really feel high tech here. I had two computers going, two cameras, and the slideshow. So this is kind of fun. Let me. I think I still have it because. Let me see if I can show you. I should have thought of this ahead of time. Let me see if I can show you an example. I'm going to pull up a little smaller charts. But let me see if I can show you an example of what I mean by my favorite thing, finding a great daily chart that can be used for a great intraday entry. Because I had four of them. Not sure. We're going to wing this here. All right, so you have all right, you have charts up now, correct? You have two charts up. That's a daily chart on the right and a 60-minute chart on the left. Let me just see. None of these work. None of these ever came into play for me. But I just wanted to show you. And then when I'm done with the gaps, I'm going to go through some. I did some scanning. I did all my scanning already on the daily charts. So I'm going to go through and show you some charts that I. Well, kind of a little mini quiz that I both liked and didn't like. I'm going to show you those. No, I didn't save those. I had four charts that were daily and hourly charts. Before today that I love the setup, but they're not there right now. Well, let's do it right now. I went through and I got about a dozen stocks that I flagged here. And I'm going to put them right on the screen here in front of you. And I'll tell you, just take a look at a couple things. And I don't want to do this too long because it's going to take a while. And when I'm all done, we can go back and pull these charts up and I can look at other things, or if you want me to look at some of your stuff here. So like here's going to be a favorite for me tomorrow. And it's this one. IMGN. And I give you a few of the things I like. The last move up broke above the weekly. I don't love that weekly per se, but this last move up broke above this area. Wide bar, big volume advance, and then a pullback. And this is the type of chart that I love to find for an intraday play, possibly even turning it into a swing trade with an intraday entry. This is something that I love to catch on weakness even, and we'll look to play this in this area on a reversal tomorrow morning sometime. It's easier than it looks. It looks like it's really difficult. It's not that bad. That's going to be a favorite for me. Let me see what else I had in here. Now some of these I didn't love. Okay, what is it? Now CTRL is not something that's going to have an intraday entry anytime early tomorrow, but take a look at this daily chart of CTRL and tell me if this is something that is bullish to you, bearish to you, and what specifically about it says bullish or bearish. I don't know. It's going to be hard for you to identify. You can just give me approximate dates. You can see down there's August, September. You can give me what is it? What is it about this chart that Okay, so we're trending up, right? And you broke above an area. I mean, that's a typical thing to say. That's always okay, but I could find a lot of those every day. I don't necessarily like them all because almost everyone that breaks out and continues will break out and pull back real sharp, right? So you have to have the right setup exactly, and that's not bad. But what about that makes me say, yeah, I like that breakout? What about that breakout that says today's bar wiped out a week? Well, yeah, that's because it's a narrow week. But what else? I don't care so much about closing at the high. It's good and bad. It can be. Now you're all look a little wider. You're missing something to me that's really critical on this chart. It's something I saw when I was scanning. Yeah, it's a very nice uptrend. Yes, very nice uptrend. Now let me show you because you're missing it. This is right there. A lot of people don't catch that. That's a big gap up that day. That's a red bar, and it didn't just gap that little bit. It didn't gap. It did not gap just that little bit from there to there. Can you see where I'm drawing? It gapped that whole thing. It gapped over the whole red bar. That's a real sign of power, especially when it follows through, right? Yeah, that's right. I mean, you probably heard it called a mortgage gap before. Um, that's just a very powerful thing because it's an indication. I love war analogies, but it's an indication where the bears stepped up and said, enough, you're done. And the bulls said, "You're crazy. You don't even know what you're talking about. We're so far from being done. You don't even know what it is to be done." So, because of the extended movie, it'll pull back. Is a very nice. This is the whole thing I like. That gap, this pullback, and then you're flying from there. This could have been played down in here. I didn't pick this one up earlier. I don't know why. I didn't see it till today. I'm not sure how I missed this. The volume was there. No, maybe the average volume kicked it out for me until recently. I'm not sure. But anyways, that's something. So there's an example of something I really like. And again, I'm not going to go through tons of these, but let me just look at a. There's one in here I know. Oh yeah. I had this one as Q. I had Etsy, ETSY, MTW, and like some little technicals, a lot of things that people get wrong. Somebody that is a little more advanced would say, this is not a good pullback because we didn't make a new high, right? Not the case. So again, you're using technical analysis 102 rather than 101, which is good. But now 103 would say this move, this separation is going to guarantee that your next rally is not going to make a new high. But that doesn't mean this is an unplayable stock or it's a piece of garbage. It's perfectly fine. You just got to understand this next high is not going to be a new high. But there are. I have WDAY just put on here for the first time. And I think you can all see the interest there. That's a pretty just clean. And actually, for those of you who know the language, that's a transition A at the secondary buy point on a very nice transition that goes all the way out to the weekly chart. There is Netflix. I had this on the list 2-3 days ago. I've liked Netflix since since down here. And here's what I want you to look at. LBTYA. How do we like LBTYA? If you have some charts, look at the charts yourself. Or maybe here. You don't need the hourly chart. Let me show you the weekly chart that's behind here too. How do we like LBTYA? Yeah, good. This one I put on here just to show you something that at a glance you may think is okay, but I don't really like. I do like what happened right here, and that's the reason it first caught my attention for 1 second. That is really all the breakout you need. And in another chart pattern, I wouldn't be worried about that because there's not really a lot of resistance there anymore. But here's the weekly chart. there is a lot of resistance here because you're not seeing some of the stuff off over here. This is a big resistance area on this weekly chart, and this is going to kill this for a while. So it's likely, even if it's bullish, it's going to be sideways for a while. So again, just kind of an example of things to look at, things to look for. But again, might I digress? The purpose here is not really to go through all the technical things on here. I could talk about this all night. I have COH on here as a bearish watch, but it needs confirmation. And that's the reason I like that, is because under that bottoming tail, then you have a failure pattern entry, which is good. And I had one more on here that I want to talk about. This. Why was this on here? I thought for sure that would spark my memory. You're not seeing it. I'm looking at another chart here. I put this on here for a reason. Not sure what it was. Oh well, okay. All right, so let's continue on with where we were here. I'm going to take you back to the slides, and I want to get to the next part of this, which is using gap analysis. I think it is hard to beat a swing trading or core trading portfolio that is made up of nothing but gapping stocks. And again, they have to be the right concept of gapping. And again, that's another art you have to learn, another skill you have to learn, is understanding gaps. And again, I am not talking about ever buying a stock before it gaps. A lot of people, I realize, get confused by that, so I try and make it clear whenever I talk about it. I'm talking about after a stock gaps, is analyzing the gap, and some of these gaps will continue or some will reverse direction based on the type of gap that it is. Okay? So we're talking about after the gap. Some gaps, and gaps have a huge variety, and this is why the three classes I teach, like two of them are kind of back-to-back. There's Mastering Technical Analysis and Mastering Advanced Tactics, and then the gap class is all by itself. You can take that first or last or not at all, but because I think gaps are really unique because they actually can be traded as quick day trades early in the day, as quick day trades at late morning, as all-day trades, and they even become great for swing trades when they're played the next day or several days later. I'm going to show you some examples. And the great thing is that these stocks often have big moves. I mean, these gaps often ignite moves that last for days/weeks, days/weeks/months. That's hard to say. So your use depends on your availability to a large extent. If you're available during the trading day, it can open the door to some incredible entries. I'll show you a couple examples. If you're available the first 30 minutes of the day, it can be helpful because you can make decisions about entering a stock during the first 30 minutes. But even if you're at work all day, you can still review in the evening and set your orders before you go to work, and it can yield really great results. Let me see, what's this next slide? Right, okay. So let me go back to the charts here, and I'm just going to show you a couple examples of some things. You should have the charts back up there, right? Yeah, you do. And like this is just a great swing entry here. This is the type of chart that'll end up in a seminar. This is an example of really beautiful stuff. Now, you have to understand, not every gap up is bullish, and not every gap down is bearish, and not every gap up is a good long-term trade. When you understand gaps properly, you get to the point where you can say, that's bullish today, or for the next 2 days, or it's bullish for the first hour, but then it's bearish. And you can say that with a lot of confidence. This particular pattern, at the time that a gap was very bullish long term, going to go up a lot over the next several days or that day, it may have had a pullback that morning. You can tell all this by looking at the gap. Now, this didn't have much of a pullback at all. This thing really kind of just took off this day. You don't know that for sure. It was possible it was going to pull back, but as a swing trade, as long as this thing keeps moving upward, this is a great thing to enter whenever you feel comfortable with it. And again, just take that 5-day move. I mean, how many swing trades do you get into? Move from $30 to $35 in 3 days, 4 days. And by the way, for those of you that are with me during the day, or know this for yourself, this is not like a 1 in a million chart. I mean, we see this 3 times a week at least, 4 times a week, right? And what I meant by the last slide you saw, it kind of said, well, if you're with the market all day, or if you're with the first 30 minutes, some of these gaps, you take the chance of just getting in very early, because you know they're going higher with pretty good certainty. And when you're wrong, you're wrong. When you're right, Look at this. You get in this stock, you could get in this with possibly it could have been a 30-cent stop that morning, and then you hold for the day. You're up, 10 hours or whatever it is for the day. You sell whatever you're comfortable with and hold whatever you're comfortable with as a swing trade, having already booked the profits from the first day and understanding that your stop is so far down here you're never going to see it, not anytime in this near lifetime. So this can create an incredible way of swing trading if you're with the market during the day. And even if you're not sometimes, even if you're not with the market all day, if you can be with the first 30 minutes and watch for the right entry on this, you get in this thing, put your stop, go to work. And for some people, it works out better. For a lot of people, it'd be better if you were at work and catch this whole green bar rather than selling along the way. So that's an example. I have a list here of 15 stocks that I just pulled out going through the charts real quick. Some from memory because they were recently, some I found from a while back. So there's tons of them on here, and these are all. T2 had this. Oh, by the way, I'm sorry. I want to show you one other thing too. That was EL, LL. The other great thing is look at this weekly chart. This gap also is the trigger for a setup on a bigger time frame. Do you all recognize the setup over here? Here's a setup on a weekly chart. You're waiting for the setup trigger, and then you gap into a setup. Gapping into a higher time frame setup is just like perfection. It's just something you drool over in the morning when you see that. What I put up here. So T2, another example. I mean, boom, long-term bullish gap and up a month. It's just up for a month. Period. Right? VIAB, what was it? Here's going the other way. Just both directions, right? Very bearish long-term gap. Falls. Look, it's still falling. A little counter rally. And when I mentioned, hey, even if you can't be there at all during the trading day, is to put these big gappers that have moves on a list and catch the next entry. Catch, the entry in here before you go to work. Say under that bar's low, short. Catch these entries in here. They don't all set up like that. Sometimes they just keep going, but sometimes you have the opportunity, even if you're not with the market during the day, to catch some of these things. And again, PSTG, the LL I just played Monday, PSTG I played. Here's another great example. PSTG, Papa Sierra Tango Golf. What a move on this gap. I missed the gap this day. I was like, if you just heard that, I just hit myself in the head. But you know what I did? I played this day. Right? Some of you in the room with me that day? Anybody here that day? Played this day. Got a really nice move out of it. Now, why did I play it that day? Well, because of the gap 2 days ago. It stayed on my list. Right? Anybody in the room remember this? PSTG? That green bar day. So got most of that move that day. So again, you see these gaps, and they can create opportunities that morning, at open, that morning later in the morning, the next day, a week later, all over the place. Right? So that's something that, going back a few years, I didn't really talk about, but to me, I've proven it, that a swing core portfolio made out of the properly founded gaps can be the best thing you do. The other thing that a swing portfolio based on gaps, not necessarily core, gives you another advantage of is that for the most part, you can take market analysis out of it. Gaps like this, at least for the first few days, will generally run regardless of the market because they have their own individual issues they're dealing with. Okay? Any questions on this? Because I want to go on to the second topic for tonight. And again, we can do some look at my stocks when I'm done, but I'd like to take 15 minutes and run through the next topic real quick because I've had some requests for this, and for the subscribers to the DTS Market Letter, I'm going to do this on a regular basis, like about every 6 weeks or so. For this first one, because I'm new, company's new, I invited everybody to this. That won't always be the case. But I invited everybody to this. You can get a little feel for what we talk about in the letter. Okay? Oh, Ron, when I'm scanning the 1,000 stocks, if you don't take out the ETFs, it's about another 300 symbols you got to go through. And so many of the symbols are the same thing. I mean, you have this, you have the Qs, the SPY, and then you have the double Qs, the triple Qs, the double SPY, the triple SPY, levers. You know what I mean? And anything that's right, yeah. So it's just a waste of time to me. There's the market. Okay. Show me a couple sectors maybe. I go through about 12 sectors too. So what's gold doing? Okay, let's look at gold. But then I don't want to see it 75 times after that. Okay. So understanding the market letter, and I just have a couple slides here about this. Just going through the letter, and this is mostly talk here, but the letter, like if you look real quick, there's the top part of the letter, there's the middle part, there's the bottom part. It's all one long PDF that you get. So I just broke it up so it'll fit on the slide. Okay. So the top part here is something important to talk about. That's just a link that if you get the letter and you never clicked on the link, it's like a page and a half description about how to use the letter better. Kind of some of the stuff I'm going to go over right now, but it's something you should do. And then there's just opening bell, a quick little comment about what's going on, just whatever I feel like saying. And then there's the DTS calendar, what's coming up. Like tonight, I'm doing this at 5:30. And then the first thing of real information in here is this, and this is something people have really, really liked a lot. These are scales intraday. Where's my, hang on, let me get the little red ball, the little dancing red ball. There it is. Intraday outlook, right, which means like for today. Midterm outlook, next couple days to few days, kind of looking at the daily chart. Long-term outlook, weeks to months. And it gives you the rating. And I notice the top part of this, see the little bear and you see the little bull, see the sliding scale. Notice it's red on one end by the bears. It can't be simpler, right? And it gives you a rating. So in other words, this was from 2 days ago, this letter. The intraday outlook was just dead in the middle. So the analysis that you see below will probably say something like, we have to see what's going to happen, can't tell at the open. So just kind of a neutral rating. The midterm outlook, the reason it's been on some of these days that it has been neutral is because I have felt that the daily chart is going to be sideways for a period of time. So a lot of times this has been neutral, meaning that, again, we may fall today, that's the intraday outlook. But if the daily chart is going sideways, down 3-4 days, up 3-4 days, then we're just sideways, so it's neutral. You see what I'm saying? So people get this confused. It's like we fall for 2-3 days and go, Paul, the midterm outlook has been in the middle. Why? Well, because the daily outlook's been bearish every day, but the midterm outlook is daily chart sideways between two levels. So when you get to the bottom of the daily chart, you can go long. Okay. And then the long-term outlook has been pinned maximum bullish since, before before you guys saw this letter, when I had the letter going just to a few people, going back as far as you want to talk about, for 10 years, the long-term outlook is bullish, max bullish. And again, I hate when somebody says to me, oh, Paul, the market fell for 2 weeks and you've had max bullish. No, the long-term outlook is max bullish, meaning this is not 2001, this is not 2008. Meaning if you have a portfolio of 50% full of stocks, do you have to sell them now? The answer is no. We're going higher. Not going higher tomorrow necessarily, not going higher in a week, but we may have a normal weekly type correction. We may fall for 4 weeks, but we're going higher. We're not at the top, okay? So, and then the second thing below here is the tradability. And that, I think, is an important second consideration. And let me give you a great example. I increased the tradability of long-term outlook just the last couple days. But the tradability, even though there was maximum bullishness, the tradability of the long-term pattern was down here near zero. Why? Well, because even though we were very bullish and probably going higher, the market was very extended for a period of time, meaning it's not great entry time. Does that make sense, everybody? Does that make sense, what that means down there, tradability? Just because you're bullish, it doesn't mean you just jump in. And somebody may say, let me ask the question, Paul, if you're bullish, if you think the market's higher, why not just take it higher and trade it? Well, here's why. Because you jump in today, you fall for 4 weeks, you say, what the hell is this? And you get out of your positions, and then you go to make new highs. Does that sound familiar to anybody? Right? So that's what I mean. You can't just jump in just because you think it's higher. You need to prove you need the right entry, you need the right timing, you want to maximize your profit. So, and you can have the similar thing too. The midterm outlook could be very sideways, but it could be very, very difficult to try and enter it because your support and resistance areas are not clear areas. It's just a sloppy sideways. So the tradability is important in here. And there are times the tradability is maximum, boom, 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 time to move. Meaning this is the perfect time. So I think this little scale up here, while it's very simple, gives a great outlook of exactly what's going on. I constantly supply and update the mid and long-term outlooks, but something to remember, and it's just like we talk about swing trades in the room, you can't sit there and talk about long-term outlook all day. I mean, the average letter doesn't even mention it because what's going to change? We're talking about a 10-year move. Today, all of a sudden, I'm going to say, oh, wait a minute, yesterday was a small red bar, maybe we should celebrate. No, of course not. So the long-term outlook doesn't change. Now, the daily outlook will change, but not every day. We're sideways right now. There's not a whole lot to talk about. So the letter often has its greatest discussion about what's going to happen that day. I am very accurate with what happens from day to day. I say that very boldly and plainly, and a lot of you are here with me in the room and get the letter, and it's spot on a lot of days, and it's not off very much. I was off one day last week. I said I thought we were going to, I could tell you what day, that second green bar in the market, I said we're going to have a narrow day, and we had a big green day. The reason I was wrong was because that happens once every 5 years. What happened? And this goes through and it gives you very specific detail about what's going to happen and how to act on it. I think you can kind of read that. If you want to, if you're not familiar with this room up above, you can expand the slide area or the chart area to take up your whole screen, or to shrink it, or to zoom in, whatever you want to do, so you can read that a little better if you want to. But you get a little sampling. It's very specific in terms of saying, if this happens, here's what we do. Now, a couple of people wrote and asked me, hey, does the letter give you specific numbers when to enter intraday? And the answer is no, it can't. It's not possible. If I'm on a daily chart, I just switched over to a little clean white slate here. If we're looking at a daily chart, and I think some trade is great, and it's great, over this area, I can pick out that number and say it's 32.26, and if we go over that, blah 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 blah, that's great. The problem is intraday. Right? Here's where the day ends. I'm putting out the letter before we open. There's no chart, right? There is no chart. I'm saying things like, if the market gaps up, here's plan number one. The market gaps up and falls to this area, find long entries between 10 and 10:30. Is that specific? But I can't give you the number, right? Because it doesn't exist yet. You have to find your whatever pattern you like and say, okay, there's my entry. Paul said go long the support area in general, 10 o'clock, 10:30. If we gap up, boom, there it is. And that's what I'm talking about in terms of being very, very accurate at what to do. Okay, but the numbers don't exist, so there can't be numbers yet. Now, while I'm on this section of it, I know some people who wanted this talk, wanted to hear, well, what goes into this market analysis? Well, what goes into this market analysis is simply everything that I know about trading and technical analysis applied to the charts of the market for that particular day. I mean, that's a generic answer, but that is all that it is. So I am looking at a combination of everything that's going on, from the weekly chart on down to the 15-minute chart, to look at what's going to happen the next day, and determining based on that whether or not support levels are real, resistance levels are real, what the trend is, what the extension is, and what is likely going to happen the next day. It is based on just a real severe understanding. Severe, that's a good word. Severe understanding of technical analysis. There are times where I'm not embarrassed to say, hey, just not sure today. Just gotta let today play out, because we have to establish the levels. If you go back and you take a look at the letter here. Yeah, thank you, Art, for mentioning that. This is the letter that goes out before the market opens. In the trading room, well, then I can take and I see the levels and I see the numbers. Then I can say, okay, now here we go. We're down at that support level. We tried to pop, coming back. Okay, over this number, that's where we're long. If you're playing the market, yes, thank you. It's easy during the day, but yeah, I can't make up the numbers before the market opens. I want you to notice something, that I on this chart, it's not a mistake or it's not sloppiness, that I will use red and green lines. They're sometimes dotted, they are sometimes solid, and they are sometimes wide faded areas. They each mean something. It's explained in the little letter, and some of you may think I'm just being sloppy or something, but I'm not. Typically, a dotted line means that, red is resistance, green is support, of course, but a dotted line would mean that it's not really resistance, meaning somebody would call it resistance. It's a focal area. There's something to the left, but at this point in time, it is no. In other words, the daily chart of the market, if it does not go higher here, It's not really because of this little thing sticking up here. This is a fallacy people have about support and resistance. Yeah, I don't want to go into it right now, but that is not really any resistance stuff. Now, when you run 4 bars, the world looks around and says, hey, what's that? It stalls. But if we come back to attack this area, it's gone. It's higher. There's nothing there anymore. So there's a dotted line there, meaning, yeah, okay, that's a focal area, and in some cases that will hold temporarily, but you should expect that to break. All right. There are solid lines, and again, it's hard to be 100%. It's hard to say that these lines mean that 100% of the time because you have to kind of get in my head a little bit and I try and explain it. But there's times where it'll be a solid line, which means that it is a real area. But if it breaks, expect the move to continue in the new broken direction. Make sense? Does this make sense, everybody? Make sense? Okay. Because when you look, there's really a lot that goes into this. It's not just, blah, blah, blah. And then when you have, like here, this is a good example, this green line here, this means this is going to form support in here. And you know what? If you look at this chart, this is done 2 days ago, you look what happened. See that green, where that green is? That's exactly where we held. But it's not a precise line. There is no way, and I said that on this day's letter. If you read this letter very carefully, it'll give you a good example. I can't quite read it because I have a small on my screen. But it says something to the effect that, 3 things could happen. And one of them is if we pull back and rally, it's going to be very hard to find the level because there is no precise level. Support is often self-perpetuating. It just creates itself at some point in the right environment. So in this particular case, it could happen anywhere in here. It could form support anywhere, and you just don't know where. So you have to let it form first, get confirmation, and then play it. And that's why that wide green area and is exactly right. You can't just put a single green line somewhere and say, okay, if that line breaks, the market's going to fall. You're in an uptrend, the strongest environment in the world, and you're going to tell me that you go under some little squiggly line you put on the chart and you think prices are going to fall? You're crazy. It's not how it works. That's not how things work. Prices overshoot. They go under areas. A lot of times when a trader tells me, we just broke support, look out below, guess what I'm going to do? I'm going to go long because they're dead wrong. They don't understand support. They don't understand resistance. They read a textbook about it, and it's like reading the textbook of how to do heart surgery, and they read 3 paragraphs, they think they're going to do heart surgery. Support and resistance are not that simple. There are 4 things that go into determining the proper effectiveness of support and resistance. And I've never seen them taught, to be honest with you, anywhere. Nowhere. And they're critical because support is often not support. But again, might I digress? Any questions about this part of it? The last part is very simple. And again, if you have questions about exactly what goes into this a little bit more, feel free. But it's hard for me to emphasize more what goes into it because it's just that raw technical analysis, looking at the charts and understanding how and why things move. The last part of the letter, just the listings of the economic stuff that's out that day and the earnings that are out that day that could move the market. Again, I do not care at all about what economic numbers are out per se. I mean, I don't care what they are, what the numbers are. All I care about is that there's going to be a reaction at 10 o'clock to something. That's all I care about. All the economic numbers that come out are complete garbage in terms of thinking that they really make a move in the market. They do not. If you don't understand that, I will be doing a couple of free events over the next couple of months, and one of them I probably will want to talk to about is the concept of news and how people misunderstand it. But they're there just to know, the things that are happening. The earnings often are the things that generate the gaps. And then I put 2 watch lists out here: the intraday and 1 to 2 day watch lists, bullish and bearish, and the longer term watch list. By the way. See that first one up there, XPO? That has been on my list since day one. I only had 2 things on that list. I only had XPO on there for about a week and a half. And let me show you XPO. This thing has had. It was the only thing I put on there long term. Partly because I wasn't sure about what the market's doing. But look at this move. This XPO was from down in here. See it? Look at the move this thing has had already. The second one I put on there was the ELY. It has not really moved yet. It's moved some. Coming out of this this engulfing thing, and this again is a very bullish thing that happened to this whole thing. Just everything about this is bullish. So that got on the list somewhere in here. That's already had a fairly good move. And then those other two I put on there. Whoops, I'm sorry. You didn't see that. Yeah, sorry, I didn't move the chart over. So there's the second one, Eli, and that went on the list somewhere around this engulfing bar right here, right there. Very bullish all over the place. You missed XPO. Here's XPO. Again, coming off of here. And again, it's based, longer term, it's based on this chart. It's based on this chart, and that had that whole move. That's already had a nice move. And then the last two I put on here much more recently. Where's the list? And that's the CX and the YNDX. Here's CX. This is after that engulfing bar. I think this thing is higher, even continuing on. So that just started in YNDX. This happened after I put that on the list. Somebody correct, yeah, because I was, yeah. So correct me if I'm wrong. No, that was after. I didn't do this one, but correct me if I'm wrong on that. So this thing again, a bullish pattern, going higher. I also a couple that were on the daily swing list, and again that's the core list, those four things there. But Netflix I've had on there too. That I think Netflix is one that could almost be on the core list too, right? Yeah, Netflix was, yeah, at least for a retest of that prior high. So this went on the swing list back here, and that is also starting to move up really nicely. So anyways, well, here's Gordon has a good question, or add when it's a good time to enter. Here's the problem, Gordon. This is just a thing from my point of view. There's a line that you got to draw between a watch list and a recommendation, right? So right now in that letter, there's very specific market analysis on all the time frames from intraday out to years, and there's a list of suggestions for stocks. But once I start saying, well, here's the entry, well, then all of a sudden, okay, well, if it went over the entry and then it starts to fall, the next question is going to be, well, Paul, where would you stop this? And then you get into the whole entry stop target, and then you get into, well, okay, that's a whole nother letter now. That's called a swing core position letter, where I would be tracking what I do, and it's something that may be one of the things I add in the future, because that's the thing I've gotten the most requests for, because in the past I've done that and had a lot of followers to it. It's a lot of work on my part, which I was trying to stay a little bit away from it, not for me to take the trades, but for me to track it for you guys. Doesn't sound like it, but it turns into a little bit of a job. So it's something I may add in the future. It would be a separate type letter. But you see what I mean? Once you cross the line, it gets tough to just say, okay, get in, and now I'm just going to leave you alone for a month. You know what I'm saying? So at this level here's a watch list. If you know what to do with it, go crazy. If you don't know what to do with it, great, there's a watch list. You know what I mean? All right, guys. I think that's my last slide. Yeah. So that's tonight's presentation. I did an hour and 10 minutes. That's pretty good, even telling a couple stories and everything else. I hope you enjoyed it. I hope it was helpful to you. Again, all of this information that I gave you tonight is 1% of the story. The 99% is, what do you look for? And that's where I assume a lot of you know already. If you want to know, I'm starting my first seminar. Is going to be a week from Saturday, and that's where to come see it. It's a week from Saturday. By the way, I'm going to let you know something right now, too, for all you here. It's the 16th is my first of the 3 seminars. I'm always going to do seminars 3 in a row, Saturday, 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 1, 2, 3. But look, if you're ready to run out, just listen to this real quick. My very first seminar, the paid for one, that's on Saturday the 16th. What I'm doing is, Glenn, the first seminar tradition. Again, I have rewritten these so many times. You guys know I was with Pristine for many years. In the last 8 years, I'm the one that rewrote all the seminars and charged all the seminars. I created 2 or 3 new seminars that have been copied all over the place. But I've got this down as I just love the 3 seminars I have right now, because I took and I was able to throw out stuff that I didn't think should be in there. These 3 seminars cover 95% of what I know, and the 5%. I'd have to double the time in the seminars to give you another 5%. I just don't think it's worthwhile information. It's just stuff that doesn't make you money. The stuff in these seminars are what do I need to know to make money, not, oh, gee, that's nice water cooler talk. So the Saturday seminar, the problem is, everybody, Glenn, was that there's way too much information for one day. So what I did was I took out all the really basic stuff that I didn't even feel good teaching. You know what I mean? We're in there and you're paying for a class and we're talking about what time frames are and blah, blah, blah. So what I did was I took all the simple stuff out and I'm making a half-day seminar on Friday. I consider that to be a necessary prerequisite for anybody who takes a seminar on Saturday. So if you take it Saturday, you need to be there Friday. But I'm also going to record it, and you can have the recording, and I'm going to invite the whole world to it. So Friday is going to be the first part of the real seminar, but it's on basic stuff that I don't really want to charge somebody for. So it's also going to be open to the rest of the world to say, hey, here's what we look at. And I'll give you the table of contents for it real soon. And here's stuff we need to know just to prepare. What is news? What is technical analysis? What are charts? What are time frames? What are candlesticks? A lot of this stuff that is just, and that way Saturday then, I put additional information in that day one thing like support and resistance and other stuff that I think is really necessary that was never in there before. So the table of contents are all posted on the website. I think it's a pretty clear website. It goes through the table of contents, gives you a quick rundown. I do not have videos for the seminars yet. I'm going to try and get those out as soon as I can. I've been a little behind on doing videos, but I will have those out there for you. And what else? What else? Let's do it this way. Let's say thank you for coming. We're officially done. And I will hang here a few minutes. If you guys have other questions and you want to look at charts or you want to say, Paul, what about this? I'm in this or whatever, feel free. If you don't, go and have dinner. We'll see you. Hey, Corvo. Thank you. If you want to take off, take off. If you want to hang around and ask me some questions, feel free. Of course, I didn't have dinner yet. Don't worry about that. I had a terrible day because my internet was down until 3 o'clock. Terry, pricing for the products. I am pricing stuff. Again, I'm out having fun. You got to pay for it or you're not going to enjoy it. And the seminars, I think the price of a seminar should be $14.50. I have them at $12.50 for like the first year. So they're what I would call really affordable. If you want to do all three, there's a discount price for all three. So what I would call really, they're not $2,600. I know somebody has one of my seminars. It's a duplicate of my seminar, except it's chopped up and it costs 4 times as much, literally 4 times as much. So they're what I consider to be very affordable for everybody. So they're $12.50. You can see them on the internet, clearly posted. You can just sign up there. You can call me if you want, talk about them, whatever you want to do. And you know what else too is this is just me, and I'm sure I'm doing everything wrong. I'm just having fun doing this, but I'm never going to have a sale. You're never going to get emails, salesy type thing. I don't care. I'll be here. I'm going to be here for 4 years is what I'm guaranteeing everybody. I probably want to retire at that point, but I'll let you know after 3 years if it's going to be longer. But I'm going to be here 4 years. When you want to take them, you take them. If you don't want to take them, don't take them. I don't care. That's up to you. But that's what the price is going to be. It's never going to be cheaper. There's never going to be a sale. You don't have to worry about, oh, maybe if I wait till there's never going to be a sale. They'll always be every 6 weeks. So if you want to wait 6 weeks, it's all up to you. There's no pressure. Just whatever you guys want to do. As long as I have 2 people that want to take it, I'll teach it. It makes sense to everybody? Ness, I do not use any templates for TC2000. If you email me, I can tell you what I use for my simple scan stuff to create a universe. You don't need to pay for that. I'll just tell you. Just email me. Okay? Paul at Discipline Trading Strategies, or just go to the website and you'll see where to click. Okay? Sean, I see you. I'll get to you. Let me just get. I started this conversation about seminars to make sure everybody's good, and then I was involved in the stage for Hurricane Shredder. Oh, cool, Cuervo. You didn't miss much today. Don't worry. Yeah, Steve, I trade the NQ futures. I only trade the NASDAQ. I do trade them. I mentioned, well, right now in the room, I am not posting those plays because of the way I enter them. I just mention them casually, that what I think is a good day to do it. I do like doing them a little bit. I throw those in there on myself somewhat. It's something, again, maybe sometime in the future I'm going to add that to the mix. But yeah, I do like, I only do the NQ. Just all I do, period. All I do. Yes, this is recorded. As long as I didn't screw it up, it's recorded. I'll post it on the site. Give me till tomorrow sometime because I don't feel like doing it tonight. Retakes will always be included forever, Alex. because I want to teach you how to trade, and you need to take these multiple times. Not because I'm a bad teacher, not because you're stupid, but because you just need the repetition. You have to go to the market, come back and take it again. Always retakes forever. Guaranteed, has to be. Okay? You know why, Gordon? Because I found it not more beneficial to try and trade something else. That's the market. I look at the Qs as the guide to the market. I look at the Qs and the SPY. But when they're the same, there's a lot of fallacies out there, Gordon. Like sometimes you think that if the SPY is strong in the Qs, you should trade the SPY long. That's actually backwards. You look at statistically, they play catch up. So if the Qs are weaker and you're in a bullish market, you're going to have a bullish day. You'll make more money playing the Qs. So you could switch. I could do the ES. I do it once in 2 months. I just don't. I just have decided it doesn't matter. Just you trade the market, trade the Qs. You're done. That's it. That's what I do. That's just me. You know, but I don't do everything right. So I mean, there's nothing wrong with doing something different. Yeah, and it's better ROR too. That too. Yes. Yeah. That too, Steve. Okay. All right. So I think I got all the questions. Blah blah blah. Blah. Thank you, Sean. Yeah. Yeah. Absolutely. Everybody's still learning. You know, to some extent. You just gotta get over the hump where you can make money. All right. So thanks for all the comments, guys. I'm gonna go back at a couple of real questions here. I think Sean had the first thing about GME around 10 this morning and held. Sold some in a close, still holding tomorrow. I'll take a look. All right, so GME, I got the charts up for you. Okay, see, here's a category, Sean, where, thanks, Carmen. Here's a category on GME where some personal preference slash psychology comes into play, but I don't like doing these. But that being said, Sean, a lot of them work just great. I don't personally like the gap down reversal things because they tend to more often than not get what I call whack-a-mole. In other words, for those of you still hanging around, I'm going to explain what I mean by getting whack-a-mole. And the point I want to say is that you need to learn technical analysis in a way that you can understand the language of charts. Does that make sense? In other words, some people just teach, here's 6 patterns, memorize these patterns, but anything that strays outside the pattern, you're lost. It's like, well, wait a minute, that's not perfect. Does that matter? Does it not matter? I want you to understand the language of charts. Charts speak a language. I want you to think about, is a 5-year-old kid very smart? No. 5-year-old kid very smart? Sean, I'm going to take a guess that you weren't born in France. 5-year-old kid's not very smart, but you know what? I bet you a 5-year-old kid can speak French who grew up in France. I bet you he can speak French better than you. Would you agree with that, Carmen, Sean? 5-year-old kid could speak French better than me by far. True? Okay. My point is, you don't have to be a genius. You have to know the language. And charts have a language. And you need to learn the language of charts, not just simply, oh, gee, uptrend, oh, gee, breakout. That stuff doesn't work, guys. That's old. I mean, it's not like it's wrong. It's just that it's insufficient. Okay? So when somebody shows you a chart and they tell you something, I want you to ask the question why all the time. Keep asking why. You're saying that's resistance. Why? And they're going to say, well, they're sellers. Well, why are there sellers? And they're going to go, well, I don't know. Except for a couple of people, they're going to go, I don't know. I'm not sure. The problem with this is, and here's what I want you to think about, Sean. I want you to picture that you went long this stock here or here. Or see this uptrend that started? You went long here on that breakout. You went long here on this breakout. You've been holding it, looking for this big move up to 24, and you wake up one morning and you're down 25% of your portfolio. Anybody, what are you thinking? What is, because this is what drives the market. What are you thinking? Yeah, you're thinking poo. Oh, poo poo. Yeah, that's exactly what you're thinking. And then what happens is, you sit there and think, well, I'm sure this will come back, and what happens? Throughout the day, now you're down 35% of your portfolio. Right? All of you will be able to answer this question because I've been there and you've been there. When you are down way more money than you're supposed to be down, what is it that you pray for at night? Even if you're not religious, you suddenly get religious and you start praying for one thing. What is that one thing you start praying for? Everyone, all at once. Please give me most of my money back, right? Please. Please, God. Please, brown cow. Please, rock with a hole in it. Give me my money back. So what happens is, this is what I call whack-a-mole for fun, is that all these people that are in all this pain, guess what starts happening? They're saying hooray, but guess what happens? As soon as you start seeing a little bit of selling, guess what's going to happen? All these people up here are saying, holy cow, it's going to fall again. Get me out, get me out, get me out. And what happens is, Sean, this pattern tends to become one that can come back, but it ends up being a very difficult pattern to play most of the time. Now, things happen. If this never got to the point where people were in serious trouble, if nobody was panicking, sometimes they snap back right. And that's why a little gap down sometimes quickly reverses itself because the fear never came in. So I don't love these type of reversals when there's a gap in the middle of the chart. Does that make sense? Because they're just too sloppy. Remember, guys, even if you're right, in other words, Sean, even if you end up here a month from now, there's a second question, and that is, are you still in the trade? In other words, did you survive the trip? And that's why we want to try and get patterns where we get from point A to point B in a reasonable, predictable way so you can stay with the trade. Another question for everybody who's still here listening. Got a lot of you still here. Have you ever looked at a stock and said it's going to point A and it went to point A, but you weren't in the trade anymore? Has that ever happened to you? And you look around saying, what the heck? It went where it's supposed to go. I should have made $6,000. I made 150 bucks. What the heck happened, right? See, so it's not just a matter of being able to say, yeah, I think it's going to get here. It's got to get there in a way that you can stay with it. And this is one of the main things against going against the trend. Sometimes somebody will go against the trend, and they'll say, ha, told you, it got to this number. And I'll say, well, are you with the trade? And they, well, no, I got shaken out 2 days ago. Oh, well, okay, so what good did that do you? Because going against the trend, it has huge counter moves because all the buying comes in. So those are the reasons I don't love this, Sean. Now, that being said, as long as you don't get a gap against you, just play this out on the hourly chart or whatever, you pick your management style, and as long as you maintain an uptrend on this hourly chart, just stay with it. But I wouldn't want to break an uptrend on the hourly chart, you know what I'm saying? Because there is nothing stopping this, Sean, from just starting to move down, right? So I look at that as kind of a day-to-day trade. That's not a weekly chart you want to be playing, right? It's one of the things I'm going to do, by the way, too, is the only other thing I want to sell is I want to put an ebook on the internet by Thanksgiving, and it's going to be called The 25 Greatest Rules of Trading. And I'm going to give you, Sean, I didn't read what you said about catch up with you in a minute, and I'm going to tell you rule number one right now, the greatest rule of trading. And the reason I want to do this is because most of the rules you learn aren't even good rules. A lot of the rules are worthless. A lot of them are bad rules. But one of the greatest rules you learn on day one that is still the number one rule is play the trend. It's unbelievable. You can go full circle and study wherever you want and study in Taiwan and study under the ocean and study whatever you want to study. And you know what you come back to? It's hard to beat that rule, stay with the trend. Right? It's just hard to beat it. It just really is. So I'm not nuts about it, but play the hourly chart day to day, Okay, I'm reading what you said, out by Friday, blah, blah, blah. Okay, gotcha. All right, so somebody else had a question up here, I think. It was, I know who it was. It was Herman, right? Herman, you had a question? I didn't see you, Herman, here till you asked. Herman, I'm sorry, what was your symbol, Herman? So many people are typing, I kind of lost you. And anyone else who had a symbol. Simon, hey Simon. Simon, were you here for the whole thing, Simon? I did. I went through how I scanned the whole procedure. I mean, this is recorded. You can listen to it. I did that. I started at 5:30. Were you here? 5:30 on. That's what this is about. Is how to scan to find candidates to put on the swinging core list. Okay. Data. Data was on the core list at one point. On the in the letter or in the room. Yeah, data's fine. I think yeah, I sometimes I take them off, Gordon, because they're working so well. There's no longer what I call a good entry. Like I got to take whatever XPO off pretty soon. Um, I still like it. Yeah, it's fine. I mean, it's just fine. The weekly chart's not a problem. The daily's still doing its thing. I don't really have a problem with it. I don't have a problem with this. I think you have to understand that this next move. See, the issue here is here. So I wouldn't do this like today. I think that you may end up sideways in here. This one I'd want to pick up, back down in this area. Or if it's too sloppy, after it consolidates, get it the next time. But that's probably going to struggle a little bit in here to make a new high. It's still a strong stock. It's still good stuff. Okay. Oh, oh, you mean for the assignment on the? Somebody's asking about. Maybe it was you. Was asking about what scan criteria using TC2000. See, I don't use pre-done scans that give me the answer. I go through 1,000 stocks, and all I do is I can tell you what it is. I just use stocks that are greater than $2.50, over 800,000 shares a day, and take out the ETFs. I mean that's all I have a scan set up for to do, and that gives me 1,000 stocks, and I go through them manually one by one. So there's no big secret there about what I'm doing. I used to have some set up, and I just don't really use them. I like to go through them. Yeah, you told me you just got back. It's a good thing. All right, Jamie K, PPC. Papa Charlie. I do not like this anytime in the near future, Jamie. I do not like this anytime in the near future. This has become your time frame. There's a whole lot of things here I'm going to spell out, but this has become what I call your time frame of reference. And you've hit an area here where there's no magic to this, but this was where you broke out from, and you've kind of made twice that move. I really want to see us back in this $26 area to be interested at this point. It's not that you can't keep going just because it looks extended, but you're seeing signs in the daily chart. You're seeing signs of a little bit of a topping pattern. I don't like the separation in here at this point. Not only there, but there to there, there to there. This has just been, it helps you identify an accelerated move. And again, it's not that it can't go higher, it just lowers the odds. And you're also seeing something that bothers me a little bit too, is that this last new high barely made a new high before you tailed out, and then you put the biggest red bar on the chart. That's the biggest red bar on the chart, right? So that starts to get you an indication that this pullback is not, listen carefully, not bullish people taking profits, but rather bearish people selling. There's a difference. Remember, guys, for every move that happens on a chart, every gap, every big move, there's people that want to buy and there's people that want to sell. There's people that have to buy and there's people that have to sell. And the issue is to try and tell from the chart to identify who's winning both of those situations. This is one of these, Jamie, where if you showed me a stock in a week and it was higher, I wouldn't say, oh my God, what happened? It's a strong stock. It's just that at this point, my indications are that this is going to pull back and struggle before it goes higher. You watch that for the next 2-3 weeks. I think that it struggles rather than does anything good for you on the long side. Okay. Melly, Vince, one of my favorite symbols. I had a streak with Melly. I don't even want to say what it was. I played this stock so many times in a row and didn't lose on it. Don't know why. Always like Melly and Melly was a long time ago. MPEL was recently too. Both anything with an M. MPEL and Melly were two symbols I always really liked a lot. Um, you got a good eye here. This is interesting, Vince. Um, this is interesting. The one thing I don't like is this, but it's not devastating. And what I like more than I dislike about that is what happened just here 3 days ago. Overall, the hiccup on the weekly chart is not a problem for the same reason I've discussed. When you have this, see, Jamie, you just asked me about your stock. See, this is what your stock exaggerates kind of like, right? You're trying to play this pullback in here, and what's going to happen is you're going to have this happen. See what I'm saying? So this is that stock that did it already. And now a lot of people will look at this chart and mistakenly say, "Oh, you just broke support. This is a short." And no, that's not how it works. I'm good with the stock as soon as it gives a secondary sign of strength on a smaller time frame, and that's what it just did. So I like the play. You may have to give it a little room because it's a little sloppy, but I like it. Okay. Any other questions? I'm going to give you 5 seconds, and then we'll call it an evening. You're welcome, guys. All right. Thanks, everyone. If you haven't seen it, stop by the site. If you're available during the day, come join us in the room for a week. Try it out. You can see all the information on the site. The site's pretty clean and organized. Just go to the services page, and hopefully we'll see you guys some more in the future. I'll be doing some little presentations like this. I'll keep you informed. Every 2 to 3 weeks, I'm going to do a little free thing like this on different topics, and I'm also going to populate the site more with some recorded short topics on things that I think everybody should know. All right. Where do we fit this webinar after it's up? What's that? Where do we fit this webinar after it's up? Oh, find it, you mean? Oh, find. It'll be on the site. I will probably email you within the week, but I'll probably have it up on the site tomorrow. Tomorrow. You know what? It goes on YouTube first, and then I link it to the site. So if you really want it by tomorrow, just email me and I'll send you the link. I'm going to try and have the link on the site by tomorrow night. You can find my YouTube site. It's a little hard to find because it's new and it's just actually there's nothing out there yet except the one trade of the week video. But if you go to YouTube and Google discipline trading strategies, I'll be about 7 or 8 down. You'll find it, and it'll be on YouTube first. Okay. YouTube's a little messy because there's no videos out there yet, so I got to clean it up a little bit. All right, or have somebody clean it up who knows what they're doing. Thanks, guys. All right, we'll talk to you later. See you guys in the room tomorrow. That'll be in the room. Take care. Have a good night.